What we found, Steve, during the Chinese New Year period was that consumer confidence was really bad. What happened was Chinese New Year bonuses were weak. And a lot of companies that we interviewed, they said last year they gave 2.5 months as a bonus. This year, only 1 month. So there was a lot of muted happiness. People were still traveling, but they weren't spending as much money in five-star hotels, and they're spending much less money going out to eat in restaurants. I'll give an example. I was in a five-star hotel where they charge $40 to go to the club lounge at night. I have never seen so much mayhem in a hotel in my entire life. People were spending that extra $40, bringing their entire families there so they could eat a buffet of rice and noodles because they just didn't want to go to the hotel restaurant. So I took my family to the hotel restaurant, completely empty. So investors need to be cautious. The Chinese New Year sales are going to be much below expectations. It's going to be quite negative. People are scared because of their weak income, Steve.
Shaun, that is certainly a warning, isn't it, to the consumer stocks here in Europe and that are linked to the Chinese market. Can I ask you about the impact of DeepSeek? Because we are seeing that as a feature where investors are saying, look, the Chinese have got this cheap technology. We've already got major tech companies from Alibaba to Huawei using the leverage of DeepSeek. What does that mean for the animal spirits and whether the Chinese get going? Because they've got this terrific technology that can drive huge efficiencies and potential returns.
So that's a great question, Karen. So the numbers coming out are going to be really weak for Chinese New Year, but actually the last few days, Chinese have gotten happier because of DeepSeek, because of the success of Xiaohongshu or Red Note. There's a feeling amongst Chinese, especially the movers and shakers, the people who start companies, the people who invest in companies, that, you know what? The crippling, crushing sanctions from the United States onto China didn't hurt DeepSeek, didn't hurt Alibaba's AI app. So maybe there's an opportunity to regain those animal spirits and start to build up new companies again. That's why actually in the short to medium term, I'm actually quite bullish on Chinese equities. I would be getting exposure to Alibaba. I'd be getting exposure to Meituan, because for the first time in 3-4 years, the 10%, the wealthy Chinese feel there's a way that the Chinese can overcome American sanctions. You look at it, Eric Schmidt, the former CEO of Google, he used to say that America was 10 years ahead of China in AI. Even just 6 months ago, he said that America was 2 or 3 years ahead. Now we've seen DeepSeek is as good as ChatGPT, maybe even better, and they did it at a fraction of the price. Also, another thing, Karen, is investors should look at Yangtze Memory, should also look at SMIC or SMIC. I think the indigenous innovation is really going to be a hot spot over the next 3 to 6 months.
That's a great point, Shaun. I was looking at a Xiaomi announcement as well around a Chinese car, so homegrown innovation. What do the tariffs do, though, at this point? Because we're seeing a bit of a tit for tat from the American tariffs to response from the Chinese. How does this impact the Chinese market?
Yeah, it's kind of surprising. You saw Rand Paul, a Republican senator, and Chuck Schumer, a Democrat senator, scream and criticize Trump for the tariffs on Canada and Mexico, but they've been silent about China. So anything against China is okay in the United States. And so Trump slapped his 10%. But you know what, Karen? There was a sigh of relief in China because it wasn't the 60% that he had been talking about on the campaign trail. And China's state government, the state media, has actually been muted in their response. They haven't been as vindictive or angry against the United States as they were in 2017 when the trade war started. What they've basically been saying is we need to protect our sovereignty. We're going to add 10-15% tariffs on liquefied coal, on LNG, and on tungsten. But I think importantly is these are fairly small areas. They only account for about 22 billion US dollars of imports. Also, tungsten is not a rare earth. So China didn't use the nuclear bomb by saying they were going to restrict more rare earth elements, which the United States and Europe needs. So from the Chinese view, their response has been muted. The attack from Trump wasn't as big as they were worried about. And that's another reason, aside from DeepSeek, aside from the rise of Xiaohongshu, that the tariff war, at least so far, isn't as bad as expected, which is why I think you're seeing some happiness in the Chinese markets.